Hello there, everyone. It's Friday, and it's me, Buffy. I'm back with the second episode of the February Weekly Market Insight Series, coming directly from the Capital Markets Trading Desk at SunWest Mortgage Company. Optimistic corporate earnings raised consumer sentiments. However, a wave of monetary policy tightening continued to shadow markets. The week initiated on a cautious note ahead of last week's interest rate decisions and earnings from big tech companies. However, the market was focused on the comments from the Fed officials. Last week, the Fed slowed its pace of hikes for a second straight session to 25 basis points. Fed Chair Powell held a news conference in which he said, although inflation has been slowed, it's premature to declare victory against inflation. He also added that the economy's disinflationary process has started. In his latest interview this Tuesday, he continued the similar tone that was set by him last week. He mentioned that the additional rate hikes may be necessary and that the peak rate may be pushed higher, especially if the labor markets remain this strong. The U.S. labor market showed that the applications for U.S. unemployment benefits rose for the first time in 6 weeks, but remain historically low. Initial unemployment claims rose by 13,000 to 196,000 in the week ending February 4th. Continuing claims increased to 1.69 million in the week ending January 28th. Treasury Secretary Janet Yellen mentioned that although the pace of increases in the Consumer Price Index, which peaked at 9.1% in June, has declined to 6.5% in December, it still remains too high, and that bringing it down has been President Joe Biden's top priority. She called the U.S. economy strong and resilient, which could defend against the recession. After rising in the initial half of the week, U.S. stocks fell following the release of better-than-expected earning reports, which showed that consumers are still standing resilient towards inflation. As per a survey, so far 63% of S&P 500 companies have reported fourth-quarter earnings results. Of those companies, 68% have beaten profit, whereas 63% have beaten revenue. As per the U.S. trade deficit report, it widened to a record last year on a surge in imports, as the companies found it difficult to meet demands with domestic supply. The annual shortfall in goods and services increased 12.2% to $948 billion, which the Commerce Department data showed on Tuesday. Earlier last week, a report from the Labor Department showed that the U.S. hiring surged in January and the jobless rate fell to a 53-year low, indicating a hotter than expected labor market that will influence the Fed to extend the steepest interest rate hikes in a generation. Non-farm payrolls increased 517,000 last month after an upwardly revised 260 gain in December. The unemployment rate dropped to 3.4%, the lowest since May 1969. Federal Reserve Bank of Minneapolis President Neil Kashkari said that January's strong labor market report shows the U.S. Central Bank needs to keep raising interest rates. Just so you know, the FOMC raised its benchmark rate by a quarter percentage point to a range of 4.5% to 4.75% last week. The smaller move followed a half-point increase in December and 4 jumbo-sized 75 basis point hikes prior to that. The market also digested comments from a number of scheduled Fed speakers. Federal Reserve officials continue to reiterate that interest rates will need to keep rising to curb inflation. Elsewhere, oil paused gains after rallying in the previous 3 sessions. Also, as per recent updates, OPEC might lift its oil output as China's reopening is adding up to the demand. West Texas Intermediate crude rose 1.3% to $74 a barrel. Gold futures rose 0.4% to $1,885 an ounce. West Texas Intermediate crude fell 1.1% to $78 a barrel. Bitcoin fell 0.9% to $22,742. Concern over U.S.-China geopolitical tensions also weighed on sentiment over the concerns of the spy balloon incident. As the U.S. attempts to recover the sunken remains of a Chinese balloon it blasted out of the sky, Beijing acknowledged ownership of a second balloon spotted drifting over several Latin American countries. President Joe Biden taunted China for the mischievous act. Furthermore, regarding the housing market, the MBA mortgage applications index rose 7.4% in the week ending February 3rd after falling 9% in the week prior. Purchases were up 3.1% after falling 10.3% in the prior week. Refinances increased 17.7% after falling 7.1% in the prior week. So that's all we have for the week. Please join me again for more market updates, figures of various important economic data, updated status on geopolitical nervousness, and much more. Stay updated with our news, and our trading desk will keep you informed with pricing incentives. Have a great weekend, everyone. Buffy out.